Good evening, savvy savers and curious investors. Welcome to Capital Market Live on Channels Television. I am Will Ibang. Let's take a look at your local investments, how they fare this week. But first, let's have a sneak peek outside Nigeria and see how other markets performed. First up, Europe. Stocks ended this week on a high note, closing high on Friday after Federal Reserve Chair Jerome Powell hinted at a potential interest rate cuts. The stock 600 index rose by 0.5%, showing resilience despite early August turbulence. The British pound also made gains, rising 0.8% against the dollar to hit its highest level since March 2022, while the euro strengthened by 0.58%. In corporate news, Nestle shares dipped nearly 4% after the company announced a leadership change, with Laurent Frexy set to replace outgoing CEO Max Schneider following our period of underperformance. However, the stock managed to recover some of its losses by the end of the trading day. Meanwhile, Hugo Boss saw its shares jump 6% after Frasers, this company's second largest shareholder, filed a request to increase its stake, according to a filing with the German Competition Authority. This move signals growing interest in the fashion brand's future prospects. Now in Asia, Japan's market saw a solid performance with the Nikkei 225 gaining 0.4% to close at 38,364 points and the Topix rising 0.5%. Both indexes reached their highest level since August the 1st, just before the market's meltdown that shook the region. Meanwhile, Hong Kong's Hang Seng index was down 0.16% as it neared the close of trading. On the other hand, mainland China's Shanghai Composite reversed its earlier losses, rising 0.2% to close. In a notable corporate move, Chinese tech giant Alibaba announced early Friday that it would convert its secondary listing in Hong Kong to a primary listing, making it dual listed in both Hong Kong and New York. This change could strengthen Alibaba's presence in Asia and appeal to a broader range of investors. And let's look at the U.S. now. Stocks rallied on Friday after Federal Reserve Chair Jerome Powell hinted that interest rate cuts might be on the way. The Dow Jones Industrial Average jumped 462 points to close at 41,175 points. The Nasdaq Composite climbed 1.47%, while the S&P 500 gained 1.15%, finishing at 5,634 points, putting it close to the all-time highs set last month. The market's boost came early in the day following Powell's speech at Jackson Hole, where it suggested that the time for adjusting policy had arrived. However, Powell didn't provide specifics on when the rate cuts would happen or by how much borrowing costs might be reduced. Investors responded positively to the possibility of lower rates, which could ease financial conditions and support further growth in the stock market. Despite a lack of details, the overall tone of Powell's remarks was enough to spark a strong end to the week for U.S. stocks. Now back home, Nigeria's stock market ended the week in the red, driven by profit-taking activities that kept investors on their toes. The all-share index dropped by about 1.2% to close at 95,975 points, with significant sell-offs in Dangote Cement and Transcorp Hotels weighing heavily on the market. As a result, the market's month-to-date return settled in negative territory at 1.8%, while the year-to-date return remained positive at 28.4%. Market activity was a mixed bag, with the total trading volume surging by 177.1%, even as the total trading value did by 21.9% week on week. Sector performance varied, with the oil and gas, banking and insurance indexes making gains, while the industrial goods and consumer goods sectors saw declines. Alti Briscoe topped the gainers chart with a 59% increase, while Qtix PLC led the decliners for a second week in a row. Standard Insurance, Jay's Bank, and GTCO were the most actively traded stocks by volume. Now, to break down all this and give us insights into the market, a deeper dive is Professor Uche Waleke, Professor of Capital Markets and the Director, Institute of Capital Market Studies at the Nasarawa State University, KEFI. Good to have you on the program this evening, Professor.
Thanks so much, Will. Good evening. My pleasure always.
Professor, let's just begin with the lackluster performance of the equities market. We saw two green closes for the week. Well, thankfully, the market closed in the green on Friday, but we saw the performance. It wasn't so great. Profit taking is at its peak. Could you just give us a breakdown why we are seeing this? Yes, we know the month of August is usually the downtime month, but why are we seeing this rage for investors to sell off their stocks at this moment? Is there any other thing driving it?
Well, the market is responding to the economic environment. The market is responding to news, as you just read out, in the US and in Europe. The market is responsible to positive news filtering from the Federal Reserve of a likely rate cut. And that's why you saw in the US, both the S&P, the NASDAQ, they're all going up. And then in Europe, the DAX, the CAC, the FTSE, they're also up. So it's a response to favorable news. Down here, we are still battling with issues around inflation, high interest rate environment. So these are issues that investors are taking into cognizance. But if you look at the market performance for the week, generally, you would find that the industrial sector actually dragged down the market, losing as much as close to 5%. And that's primarily because Dangote Cement lost hugely. 59 naira loss Dangote stock, was quite huge. Despite the fact that the oil and gas sector, tried to lift the markets, where you have the likes of Oando, Oando gaining, as much as 12 naira. The highest gain, if you look at the top 10 gainers, the highest naira gain was made by Oando, and for the top losers, the highest naira loss, 59 naira, was made by Dangote. So we know Dangote is, of course, on a premium board with the huge outstanding shares of 17 billion, market cap 9 trillion. So anything that happens to Dangote stock automatically reflects in the performance of the market. So that's what we had, during the week. But again, if you look at it compared to what has happened, the world globally, if you compare that with the Morgan Stanley Capital Index performance for the year, our year-to-date return of about 28.35%, 28.4%, is still ahead of many frontier, emerging, and even developed markets. I was looking at the MSCI for emerging markets. Year-to-date return was just about 8% as of yesterday. For the MSCI World, for developed markets, just 14%. So at 28.4%, we are still above sea level.
And the oil and gas sector being one of the boosts for the NGX, and particularly calling out Oando. And we saw in the news that was this week, Oando acquiring, completing the acquisition of NEI subsidiary Agip Oil. And if you see on Friday, if you followed, we were tracking the market, Oando was on full bid. Would you say Oando is on the path to heading towards, say, 100 naira? Or, because right now we think that Oando is trading below its market price. What do you see for Oando going forward?
Well, Oando is trading at a price that is virtually very close to its 52-week high of 49 naira. Oando closed at about around 48 naira. The 52-week high for Oando is 49 naira. And this is a stock that barely a year ago was just around 5 naira. So 52-week low for Oando was about 5 naira. So you can see the leap. So this quantum leap, in my view, has also been informed largely by favorable news. The market is highly sensitive to information, to news. And in the case of Oando, we've seen some favorable news in the past couple of weeks. Recall that I think it was in May that it was announced that Oando was part of the Project Gazelle. Recall the project that was arranged by Afrexim Bank, the $3.3 billion crude-backed forward self-finance facility, which Oando was said to have contributed over 500 million, in the syndicated loan. So Oando was part of that, And the following month in June, we also read that Oando was the suspension on the stock of Oando was lifted by the Johannesburg Stock Exchange. Of course, you know, Oando has a secondary listing on the Johannesburg Stock Exchange. That's also a favorable news. And in July, we heard about the approval by the NUP, Nigerian Upstream Petroleum Regulatory Commission, giving approval to Oando to acquire the subsidiary arm of Eni. And this has just been concluded now. From what we hear, Oando has paid as much as $783 million to acquire 100% shares in Agip, Nigerian Agip. So that's what investors are looking at. And what that has given Oando, if you look at it, strategic interest in the oil and gas sector. We hear that reserves of Oando has now increased from about over 500 million to nearly 1 billion barrels of oil equivalent. That's the BOE. Okay, and it has also given Oando a lot of increased interest of Oando in the joint venture assets and infrastructure in over 1,400 pipelines, and gas infrastructure. So all of this is, in my view, what have propelled the share price of Oando. So investors are looking at the prospects, are looking at these potentials, when they're taking their positions.
Okay, so investors are looking at this, but are they also looking at the fundamentals? Could you just give us briefly if the fundamentals of Oando is able to sustain this trend that is taking right now?
Yes, apparently so. Even though we haven't seen the, if you look at the stock, the Oando stock, you find beside it MRF. The exchange calls it MRF. It stands for missed regulatory filing. So Oando has not submitted their audited annual reports for 2023. So they missed that, and they have said in their corporate disclosure, they've said that before the end of August, they'll conclude their audit report, and by end of September 30, they'll make it available. So it's not yet in the public domain, but I want to believe that anybody who is investing in Oando should also be looking at the fundamentals. But of course, you know that the future, the investment opportunities that a firm has, a company has, also has a way of influencing the value of that company. When companies invest in projects, theoretically we say if investments are in projects with positive net present value, that automatically translates to higher share valuations for the company. So that's what specifically what we're seeing in the case of Oando. Okay,
that's fantastic. We'll look forward to that. But let's just quickly look at what's happening outside Nigeria, which indirectly impacts the country and economies in emerging markets. U.S. Fed Chair Jerome Powell at the Jackson Hole meeting on Friday says the time has come for policy to adjust. So now we'll possibly be seeing a interest rate cut in the U.S., possibly in September. What good news does this hold for Nigeria's economy and other markets that depend on the dollar, that have their debt denominated in the dollar?
Now, okay. Well, first we expect that when rates are cut in the U.S., that automatically increases our chances of attracting capital flows. So it also means that on a risk-adjusted basis, returns from frontier economies, developing economies, including Nigeria, will be higher. So that's an incentive, for capital inflows. We also expect that it will have the effect of weakening the dollar. And if the dollar is weakened relative to Naira, it will also help our, the exchange rates. And you also saw what happened in the US. As soon as that announcement was made, the market responded, positively, in the US. But as I said earlier on, if rates go down in the US relative to what we have in Nigeria, that is expected, other factors being equal, to bring in foreign, inflows. But let me also say this. Jerome Powell has said, it was time that the rates be brought down in the US. I also think in the case of Nigeria, it's also time we I took a second look at the aggressive nature of rate hikes. Now, what's happening in the US is that the inflation rate is coming down. The last inflation rate figure in the US is 2.9%. But at the same time, the labor market in the US is cooling. When we say labor market is cooling, it simply means that unemployment rate is rising. Okay? There are fewer job openings, so unemployment is rising. If the labor market is hot, it means that unemployment rate is coming down. The demand for labor is high, and so on. So in the US, it's the reverse. The labor market is cooling, unemployment rate is rising. So the Fed is also having an eye on that, and that's why the Fed is saying for them to help, they need to bring down interest rates, so that the economy does not tank. So in the case of the US, it would appear as if the Phillips curve, the theoretical Phillips curve in economics is working. Inverse relationship between unemployment and inflation. But what do we have in our own case here? You have unemployment is rising. You also have inflation rising. So that tells you that the same tools that they use over there to wrestle macroeconomic challenges shouldn't be the same tools we should also be using here. We have a peculiar case. That is why I've always argued that in our own case, what we need is actually to hold rates, as opposed to further tightening, which of course impacts growth negatively. But let me also say in the US, the US Federal Reserve has a dual objective, not only to maintain price stability, but also to promote maximum employment, which in my view should also be what we should adopt here.
Of course, the central bank will all have to find a way to unique methods to deal with our own inflation, to tackle inflation in Nigeria. But that's for the central bank to decide in the next MPC meeting. We'll take a quick break now, a breather. When we come back, Capital Market continues right after the break. Welcome back. Now we're going to be talking cybersecurity and related to the financial space in Nigeria. We see Nigerian banks are stepping up their investment in technology and cybersecurity in response to rising cyber threats. Major financial institutions like GT Bank, Zenith Bank, Access Holdings, Fidelity Bank, and FCMB Group are dedicating substantial portions of their recent fundraising efforts to upgrading IT infrastructure and enhancing security measures. Now, Professor Uche Walike, Director, Professor of Capital Markets and the Director, Institute of Capital Market Studies at the Nasarawa State University, is still with us in our Abuja studio. Prof, recently, banks have been faced with incidents of cybersecurity. Last week, we saw an attempt into a hack attempt into GT Bank's website. This week also, we saw Fidelity Bank addressing an alleged data breach by the NDPC over a 555 million, and over 555 million naira fine is on the table here. What would you say, Prof? Are banks, even with the fundraising efforts in terms of to step up their cybersecurity infrastructure, do you think they're doing enough?
Okay, well, to start with, the case of Fidelity Bank is a little different. I think it has to do with data protection. That's why the Nigerian Data Protection Commission, is involved. To say that the process of opening an account for a customer, data privacy was not observed. But of course, Fidelity Bank has also issued a statement, denying any wrongdoing. Don't forget too that this is this is one bank that only recently got one of the highest rating, as a matter of fact, CG Plus in terms of corporate governance. So, but again, I'm happy to note that of GT, the corporation, came out to say that it was an attempt and it didn't really disrupt their operations. But banks, there's no denying the fact that banks, financial institutions, should be on top of it, because the more you integrate technology into your operations, the more the attack surface, so to say, is also increased. So Security is one major issue associated with, of course, investment in trying to integrate, technology, particularly, fintech, which is why I said earlier that banks should actually be on top of it. But it's not just the banks; the financial sector in general. I recall in the case of GT, if you also read, you notice that in 2022, not in September precisely, this same issue also came up, although it involved a very little sum, I think 1.4 million naira at the time. And again, it's not peculiar to banks really, but majorly the financial sector, and for obvious reasons. In the stock market, for example, we also have similar instances. In January this year, if you recall, the U.S. Securities and Exchange Commission was also came under attack, attacked by cyber criminals. They gained access into the X account of the U.S. SEC and tweeted. They went there and tweeted that the U.S. SEC had approved the Bitcoin ETF, okay, Bitcoin Exchange Traded Fund. Exchange Traded Fund is a product that tracks the performance of Bitcoin, whereas it was false. So that led to a sudden jump in the Bitcoin price at the time. But the U.S. Fed chair, the following day came out to say that it was false and that there was no such thing. But what's interesting is that even the Twitter also, laid the blame on, squarely on the SEC by saying that SEC at the time didn't implement the multi-factor, authentication process at the time. So the financial institutions generally, should be security conscious, and that's why in some jurisdictions there are also, laws to protect even bank customers. In the U.S., for example, there are laws that require banks to immediately return the money of any customer, okay, that lost money, or that money was withdrawn from his or her account without authorization, as long as that customer reports within 60 days of the thing appearing in his bank statement. So such laws are there in the U.S., and maybe we need those kinds of things here to protect bank customers. But generally speaking, the issue of cybersecurity is very, very critical because of its spillover effect, because of its contagion effect, particularly if it has to do with systemically important banks, which is why even the IMF, okay, has also some guidance on that. IMF is always emphasizing that banks should ensure that they have cybersecurity strategy, in place. Okay, and only recently too, even the Central Bank of Nigeria issued some framework to banks. Okay, the framework that has to do with the governance mechanism for cybersecurity. Okay, where it clearly spelled out the role of the board of directors, the role of senior management, and particularly the role of the chief information security officer, who must be of high grade or high level in the organization, not below the position of a senior manager in the case of banks with international authorization. So these things are there, to ensure that financial institutions are made less vulnerable to cyber attacks. So what's important in all of this is that they must ensure, speedy response and also, speedy recovery measures. That's the only way they can be resilient. So risk management measures are very important, and they're also highlighted in the framework issued by the central bank, talking about risk identification, risk assessment, risk measurement, risk treatment. Okay, how are you treating the risk mitigation? And then, of course, monitoring and control. All of this, when you have them in place, you reduce the vulnerability, to some of these attacks, whether they're coming from phishing or they're coming from, the one I mentioned in the U.S., the SIM swapping, the case of even malware, using malicious software to attack the your computer systems.
We do hope that these methods or these recommendations that you've made are practiced here, because a lot of people, a lot of bank customers are really scared, especially when it comes to knowing that their data is not protected as much as it should be, or that they could be hacked at any moment if the banks are not properly protected. But we take your insights and we really appreciate them, Professor Uche Walike, Professor of Capital Markets and Director, Institute of Capital Market Studies at Nasarawa State University. Thank you for sharing your perspective on the show.
Yeah, thanks so much, Will, for inviting me.
And that's a wrap. It wraps up another edition of Capital Markets. Remember, whether the markets are bullish or bearish, knowledge is your best investment. Keep watching, keep learning, and keep growing your financial savvy. You can watch this again on our YouTube channel. I am Will Ibang. Thanks for watching. See you next week.